Welcome back to the Talking Hedge. I'm Josh Kincaid, and this is your Cannabis Business Podcast. Today on the line, I've got Rob Hendrix. He's a consultant and rec shop owner in Central Washington. Rob, thanks for being back on the podcast.
Hey, great to be here. Happy Friday.
Yeah, today we're going to chat about the Canadian marketplace, where they're at with sales, take a look at some of the largest multi-state operators sending some SOS signals, and other highlights in a capital crunch for the cannabis industry. So Rob, let's take a look at this report. It's a second year or the 1 year anniversary. So starting 2.0, October 17th, Canada can now have more extracts, so different solvents other than just CO2 and ethanol. So that's going to provide a lot more edibles and concentrates. And so this report goes on to say that the previous 12 months estimating legal cannabis demand in Canada will reach 2.5 billion Canadian, and they expect an 18.2% compounded annual growth rate through 2024. New Frontier data estimates there's currently 1.5 million active legal market participants compared to 4.1 million in the illicit market. And after 1 year of legalized use, and despite a delayed launch, poor supply, and stifled sales due to limited retail access, Canada's cannabis market is now primed for a rapid and solid growth. So they expect that Canada's expanded product lines will draw more illicit market buyers into the legal fold, creating more jobs and ultimately increasing tax revenues for Canada.
There's several things that just kind of hit me right in the forehead reading that article. Number one, the federal government in Canada, it's their responsibility, in my opinion, since they legalized it from shore to shore, to reinforce and engage with the legal stores who are compliance driven, taxed heavily, I'm sure, like we are down here in the States. The illicit stores, the gray market, black market, whatever you want to call it. I spoke up at the Cannabis Expo last December. And the legal store owners that were there were really crying the blues because the government was not in any way beginning to get rid of the black market, gray market stores. They were being supplied by illicit suppliers, illicit growers, not legal growers. And these folks were really singing the blues. It was difficult to sell what you don't have, and it's difficult to sell when you do have it against a market that's not taxed and not compliance driven. It's not I don't mean to sound like a whiner on behalf of the Canadians, but it really was completely unfair.
Well, Alan Brockstein, author of 420 Investor, would agree with you. He said that domestic policies have made the environment, quote, as bad as it can be. You know, there was some advice that they could have switched from a medical market first and then went to a regulated or legal market afterwards so that they could get their distribution from there. Instead, they just try to start from scratch, kind of like in Amsterdam, the supply just comes out of nowhere. And so I think Canada just kind of wanted it to come out of nowhere without having an automatic or existing infrastructure. So it's been tough because the product was garbage. A lot of the flower was moldy. A lot of the concentrate wasn't quality. And so they're blaming the black market, but the illicit market was there to begin with. You have to be able to have more products, cheaper prices, better quality in order to compete. You know, so there's a lot of complaining, but just look at the fundamentals. You know, looking 1 year later at this Benzinga article talking about every major cannabis stock that's performed since Canadian legalization. I don't know if you've been paying attention, Rob, but in the last 6 months, there's been a crater. Actually, there's a 62% Fibonacci retracement from the highs in March. And so anybody who had invested in an ETF is now beginning to look at potential bottoming out. So we're looking at maybe next week as the ripe time to get into the stock market if you pulled out already. So looking at like what's good, what's out there, who's moving, MedMen, I don't know. I think that's kind of on the downplay. If there's any correction in commercial real estate, they're going to be hit really hard.
It reminds me an awful lot of the craziness of the .com era back here, back in the U.S. And a lot of these companies, there's a lot of mergers and acquisitions going on. There's a lot of talk about international trade. There's a lot of talk about, possibility, and everybody's going to be a millionaire, a week from Thursday as a result of investing in this thing. And that's just not realistic. There's some companies out there, and I'm no analyst by any stretch of the imagination, but there's just I think it's a bubble. And we've seen some cratering, we've seen some adjustments. I think we're going to see more. It's a complicated situation because it requires the cooperation of government at every level, really, to make this completely flourish. And I don't believe I know we don't have that obviously down here with a Schedule 1 designation, but in Canada, and it's you have competing markets. Realistically, you've got the legal market competing with and I believe still competing with the illicit market. And even though there's been some upticks, I think the stats were roughly 3-to-1 number of illicit market consumers out there versus legal consumers. And I'm sure that has to do, and you alluded to this, the variety, the choices, and perceived quality, and got to be prices at the same time, compared to the legal stores. I hope that the legal stores can hold on and compete and event. What we've done down here in Washington State, frankly, and I alluded to this before we went on live, that it was frustrating when I was speaking up last December in Vancouver, that here British Columbia sits right on top of Washington State, and seemingly they weren't watching a lot of the same issues that we dealt with. Our medical situation wasn't dealt with down here until the summer of 2016, effectively. And even then, it took a while. There was some real resistance, and in politics, and I don't know Canada, and I'm not a Canadian citizen, but I'd be willing to bet you that you got to follow the money. Some of these guys that are illicit operators, they deal in cash. They have a lot of cash, and they can buy a lot of influence with that cash. And you get a collective slowing down, if not resistance, to completely doing away with the black market. People aren't signing on to that. They don't believe in it. We had the same thing down here in Washington State. The medical, it was not very organized, not as organized as Vancouver, especially, but it was powerful because there was a lot of money. These guys have been operating since 1999 with no compliance, no license, no Department of Revenue, no Department of Treasury relationship of any kind. It was like a garage sale, for 20 years. And they bought a lot of influence, and they pushed back really hard. They pushed back hard. We were able to hang in there. The first year down here was tough. And the medical, they were kicking our backside. They really were, because they weren't subject to the same rules, regs, wax, compliance, et cetera, et cetera, et cetera. Well, now we've through some changes at the legislative and regulatory level, and just old-fashioned entrepreneurism and new products and capitalism, and just people just finding a way. Now we've kind of settled into a situation where, at least as far as cannabis goes, black market's not a concern.
Right. I think capital is. Alan Brochstein goes on to say that people are grabbing money. They've seen some deals done at very low prices. And at the same time, Canada looks like it's getting even worse. And so it's not just Canada. I mean, that's leaching into the U.S. You see MedMen falling 15% as net losses more than double. And that's going to be hitting a lot of U.S. companies. I think a lot of the early mover or first mover advantages are starting to dissipate, with U.S. companies going into Canada, getting that publicly traded funds, coming back down into the U.S. The timing is going to shift. I think we're going to see a lot of consolidation as that speculation up in Canada is popping. People are going to start looking, investors and otherwise are going to start looking at these companies through traditional lenses, right? Just value investors right now. Alan Brochstein just had an article about cannabis being ripe for value investors. So he goes on to say that maybe there won't be exactly as much revenue immediately because there has to slow down their expansion a little bit. But there are a few companies right now, cash flow break even, that have adequate capital to really take market share over time. Because some of these other companies, they don't know if they'll go out of business. They're going to have to really stretch or really retrench. You need a war chest, and it's not going to help if Quebec raises the legal limit for cannabis to 21, which I think is crazy. If alcohol is still 19, I don't know if it is, but should be the same age. That's not going to help sales. But even Seeking Alpha has an article about how multi-state operators are sending, SOS signals. So whether it's, the decline in commercial real estate or just, these crazy valuations that we've seen, there is some retrenchment overall.
Mm-hmm.
So I don't know what long-term that's going to mean for some of these state operators. Maybe these first movers are going to go bankrupt. Maybe they'll have to liquidate their assets. The summary of this article is that the cannabis multi-state operator model has some serious, perhaps fatal flaws. Majority of publicly traded cannabis MSOs were established to liquefy otherwise illiquid private equity investments and make a fortune in the roll-up process for insiders. Most multi-state operators are having to revise their unrealistic game plans as a result of hostile financing environment. And picking a multi-state operator winner amongst the largest 8 is tougher than picking losers. All but one of the largest MSOs represented have significant percentage of shares locked up, and that's weighing on some prices. And I mean, it's not even just multi-state operators. KushCo had some recent issues. There's a capital crunch in the cannabis industry that's kind of highlighting this. And I think it's the overall market. We're seeing the repo rates, in the regular market. The Federal Reserve is having to print $45 billion a day. So there's a couple of bank failures you can see. There's some money issue, tightening issues. And I'm seeing that in institutional investment all the way down to angel investment. I really think that a lot of the speculation is retail, being mom and pops, where everyone else is kind of going on the sidelines right now, taking a look at what's happening in the repo market. The overnight interlending between banks is an issue. This hasn't been that bad since 2008.
Wow, you were referring back to 2008. That was obviously a worldwide disaster. So let's hope we can avoid most of that. I have a fairly overly simplistic view of this thing. There's a lot of talk. There's a lot of M&As. There's a lot of speculation, as you say, a lot of players. But until we have an organized market, a production, a supply stream, and a way to retail to consumers where transactions actually are occurring, a lot of these valuations just seem to me they're just, you may as well be throwing darts at a board. It all will begin to happen when there are sales occurring to consumers, transactions, millions and millions of transactions across Canada, across the United States, whatever. Nothing happens until a sale occurs. Nothing happens until there's somebody to buy the product. We can talk about what can be. We can talk about, projections in Canopy and all kinds of things. But the whole system has to be working. And like it or not, at least at this time, the government is heavily involved in that process and that supply stream to the end user. And I don't have a lot of confidence that they understand their role, not only from a regulation standpoint, but also from promoting the legal market. It's got to happen. There's got to be a symphony occurring here where everybody's rowing in the same direction. And I don't see that yet. There's a lot of, I think it'll happen just like it happened down here in Washington State. But it's just too bad that we're going to have to go through some pain and suffering, and probably some businesses are going to go out of business. Some stockholders, some speculators are going to lose money. And from my standpoint, sadly, the mom and pops may not be able to hang on until the government gets it figured out so that they can.
October also represents when a lot of these businesses give up, right? So we or at least I'm constantly seeing every November, million-gram lots or more going for 7 to 8 cents per gram, and just flash frozen, getting out of the game. And if Canopy expects to get $1.74 per gram, guess what? It's only going to take international legalization for those companies to have to file bankruptcy or reorganize. You had Hexo delay their earnings and then have to lay off a fifth of their workforce. You have Kush.com laying off 50% of their workforce. You've got Pax Labs laying off 25%. Weed Maps laying off 50%.
Exactly.
This is kind of crazy, because if you're not prepared, if you don't have the team to advise you, and you're just going off based on CBD prices, thinking that 7,000 a kilo is going to remain the same, and not looking forward. I think a lot of this retrenchment or correction is temporary for a lot of these new businesses. Once they get board of directors and advisors, it'll help them. But ultimately, I think this potential correction, Hong Kong is already in a recession, so that's going to happen everywhere. The U.S. it's just a matter of time. I don't know if they're going to wait for the elections, but when it happens, there's an opportunity. So sin stocks always have an inverse relationship when the economy takes a dip. So cannabis stocks, you'll start to see when asset reallocation happens and people, pension funds and otherwise, put money into the cannabis space, they'll see a huge spike. And especially when you're already taking a look at how cannabis stocks have crashed. Canopy is down 62%. You mentioned a lot of PR companies. Well, the CEO of Canopy was let go because he had a lot of PR and not a really lot of revenue generation, right? Aurora is down 67%. Tilray is down 86%. Aleafia is down 76%. I mean, it's crazy numbers. And so there is opportunity, and you'll get that next wave as consolidation happens and people start to wonder where else are they going to put their money. It's going to be cannabis.
Right. Well, and it's funny, you touched on CBD in the United States, at least. The FDA really is yet to kind of come out and make a total, an actual, that's still kind of out there, I know the hemp-based and the cannabis-based CBD. There's not. I think we're going to be surprised. There are people that are going to be surprised when the FDA finally decides to get in the game and regulate this, because they're not right now, and people are running, and presumably some of the folks might be ditching cannabis. Because cannabis is bad, CBD is really good. Just listen to some of the ads on the radio and or TV. And I think they're going to be in for a big surprise. The FDA is not just going to say, okay, great, it's all good as long as you're below 0.3% THC. They're still making medical claims. That's the new Wild West frontier, and it's going to get regulated, and people are going to be slapped. They're going to get slapped hard. I would be very, very cautious about getting heavy in the CBD, because you might be looking at some of these cannabis stocks, tumbling. You kind of pivot stage left and go into CBD. I don't know that that's necessarily a good move either.
Well,
we just don't know what's coming down the road.
California just took out 200,000 pounds out of the ground last week, and they have another 400 to 600,000 pounds. And so Oregon, I don't even know if they're aware of it. So these Eastern Oregon farmers for hemp that went from cannabis to hemp are going to be affected by the same thing that happened in California. These huge farms are harvesting right now. Yeah. So what your $300 to $3,500 a kilo CBD is going to hit $1,500, maybe $1,800 a kilo as soon as this harvest season is complete. So they'll have to shift to other cannabinoids like CBL, CBG, CBN. So CBD is over. You can't make claims, otherwise you're going to get a call from the FDA like Cureleaf.
Absolutely. It's an interesting dynamic to see kind of unfolding. Now, if we got all the products that could be made from hemp, if the potential is obviously gigantic, but like we've talked about before, my little retail store is like a speedboat, man. I can make course corrections very, very quickly. You're talking about a massive infrastructure move and supply line being developed. And 20 years from now, there might be hemp related products everywhere. I mean, there's I know that there's almost endless possibilities, and I don't know a tenth of it. But for the time, it's going to be like the snake that eats a huge meal. There's a big old thing that has to be kind of processed, and it might take months or even years for us to get to that point. And there again, I think people might be. There's a lot of excitement about cannabis. There really is. There's a lot of intrigue, and but it still gets down to good, solid business fundamentals. And the fundamentals in a lot of these stocks because there's no relatively low revenue stream, too limited numbers of revenue streams. It's not happening yet. It might, but like I say, it kind of reminds me of the .com, which wasn't that long ago. I mean, I'm old enough to remember that. And
reminiscent of the .com, reminiscent of the coffee industry, very exciting, fast moving, volatile. You're just going to have to come back to the Talking Hedge to find out what happens next.
Exactly.
Ron Hendrix, I want to thank you for being on the podcast today. He's a consultant and rec shop owner in Central Washington. Thank you again for being on the podcast.
Appreciate it. You have a great day and a great weekend, Josh.
With that, we're going to roll this one up. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out.